My name is Jerry Brito, and I'm the Executive Director of Coin Center. Coin Center is an independent nonprofit based in Washington, D.C. that's focused on the public policy issues that affect cryptocurrencies like Bitcoin and decentralized computing platforms like Ethereum. The panel we've got here for you today is focused on the OCC's new FinTech charter and whether it's going to change everything or not. We've got a terrific panel with us. Next to me, I've got Ted Rogers, who is president of Zappo, which is a global Bitcoin platform. Next to him, we've got Patrick Merck, who's special counsel at Cooley, and he's a fellow at the Berkman Klein Center at Harvard. Next to him, we have Prat Valabhaneni, who is an associate with Arnold & Porter Case Scholer, and he was formerly an attorney at the FDIC. And finally, we've got David Cotney, who until this past September was Massachusetts Commissioner of Banks, and he now serves on the board of Cross River Bank. So let's get right to it. The OCC charter, FinTech charter, is something that came out of a proceeding that the OCC began in the summer of last year called the Responsible Innovation Proceeding. And in this proceeding, they issued a white paper where they basically said, look, the United States is falling behind on innovation, particular FinTech innovation, and a lot of the responsibility for that lies with us at the OCC. We're too conservative in what we charter and what we allow, and we want to change that, which was very refreshing and good to hear, I think, from the industry perspective. And they had a comment proceeding where they took suggestions from the public, and something that was suggested by Coin Center and by many others was, well, hey, why don't you create a national charter for fintechs that maybe is lighter weight, that's special purpose, it's more tailored to what these institutions are doing, and is not, is not as heavy as a full federal bank charter, but also might alleviate some of the regulatory burdens that some of the states might place. And so, after a long proceeding, essentially the OCC said, yep, we've got the authority to do this, and essentially we're open for business. We're at this point ready to take applications for such a special purpose charter. So with that background, I'm going to start by asking Prat, tell us how the OCC charter, the FinTech charter, the special purpose charter, how it would work, how is it different from a traditional bank charter, and what was the problem that the OCC was trying to address with this charter? What is it a possible solution to?
Yeah, so the FinTech charter is really just a bank charter, fundamentally. It's not a license that it gives you. It is your corporate existence. And what it is a national bank charter issued pursuant to the National Bank Act, which is the same federal law that your national big Bank of America, Wells Fargo type banks have. But what the OCC was trying to solve was the fact that at the federal level, there's no parity for state level banking activities. So if you're a bank that's FDIC deposit insured taking, you could choose to be a state bank, you could choose to be a federal bank. That's your choice. And there are implications of doing that. But if you are transmitting money across state lines or even intrastate, if you're engaged in a variety of credit functions, if you're doing certain kind of activities that are bank-like, or even you consider banking, you have no federal analog, you have no national power to execute your activities. And so what the OCC did was it thought, well, there's a lot of folks that are doing banking activities but don't necessarily have a business plan which is tied to deposit taking. Money transmission is a classic example, and they said, look, banks are doing this, we regulate them well. From the perspective of the OCC, why not grant our national bank charter but confine the activities narrowly to those limited purposes which FinTech companies are engaging in that are bank-like, that don't necessarily need deposit insurance. So what they did was, rather than going to Congress to create a new law for this, they looked at their current charter, they looked at one of their regulations on their books, which said if you engage in any one of three activities, taking deposits, lending, or paying checks, which they interpret broadly as essentially money transmission or electronic modern equivalents, those are each independently sufficient conditions to grant a charter. None of them are necessary, they're each sufficient though. And they decided with that power, why not unleash a special purpose national bank charter or a FinTech charter for all the emerging FinTech companies to modernize banking.
So Ted, what are some of the issues that Xapo faces given this choice that you have between going a full bank route or having to go state by state? What are some of the issues that you face, and is this charter a possible solution to some of those issues?
By the way, everybody here deserves an award for coming to this particular panel. It might be the least interesting from the topic of a lot of panels.
What are you talking about? This is the most interesting panel.
But actually, for a company like ours, this is a huge potential game changer. And whether they know it or not, the companies that are circulating around this conference, it's a huge game changer for them as well if this charter happens. And the reason why, to answer your question, is that first of all, this charter, make no mistake, I mean, the requirements to actually to receive it, comply with it, they're heavy. It's not easy. And a lot of expense will have to go into any company that decides they want to go this route. But the difference is if this charter is implemented, then you have to hold yourself to these standards, and it takes a lot of resources, but you only do it for one entity that's regulating you, rather than 20, 40, 48. And I can't tell you what a difference that makes. We had a couple of examinations last year, one from the Treasury Department, FinCEN, and another from a state in which we have an MTL. In that state, we have less than 1,000 really active users. It's not that critical state for us. And the examiners came in, I'm not blasting them, but they turned the company upside down. I mean, it took us 6 weeks to prepare. I was pulling up the list actually before this started. Wait, let me check the price of Zcash here. Before this started, there's 63 items, actually 73 items on the list. And they involve things like we need a copy of training and staff in terms of data security, obtain classes taken, and roster of attendees. I'm not sure what that has to do with the state MTL examiner. I mean, I know we have to have good data security, but the level of detail that we needed to provide was astonishing. If we had to do that for over 20 states, that's all I would be doing in an entire year. And by the way, I'm badgering all parts of our company for information to comply with these. So to answer your question, the main difference is not that we would if the OCC charter happened, it's not that we would be able to or want to lower our standards. It's that we'd only have to do something like that once a year.
Right, and indeed, once you do that, once you turn over all this information and you show your security is to one state, when you do it a second time and a third time and a fourth time, you're no safer the 10th time that you do it.
You're no safer, and you might say, well, you just collect all the same information and give it. It's not like that. There's just enough differences in what's asked for that you can't just take one template from one state and hand it to the next state. Of course, there's overlap, but there's not as much as you might think.
So David, as our sort of straw man, as a former regulator, we've now seen 2 lawsuits challenging the OCC's authority to do this. One from the New York Department of Financial Services, and one from the Conference of State Bank Supervisors, which I think you served as president of for a little bit, right?
Sure, yes.
So essentially, these are state regulators and their representatives saying to the OCC, you shouldn't do this. And so my question is, given that this is not a preemption of state power in the sense that you still have that choice that Pratt was talking about, Xapo can choose to go state by state or can choose to go the OCC charter route. Given that there's an alternative, why the resistance?
Well, as you said, one of the main reasons for the lawsuits, both from the state of New York and from the Conference of State Bank Supervisors, is challenging the underlying authority. Pratt described that the OCC is using authority that it sort of granted to itself by regulation a number of years ago by redefining what a bank is. Traditionally, for almost 150 years, the definition included taking deposits, other than a very, very narrow exception for these special purpose trust banks. So the OCC redefined what it meant to be a bank by saying either taking deposits or engaging in lending or fiduciary activities. So the underlying challenge is to that reinterpretation of what is a bank, which is a big deal. The courts will now have the opportunity to decide who's right on this underlying authority issue. Another thing that the suits challenge is the fact that the OCC really failed to do what every federal agency is required to do, which is to follow the Administrative Procedures Act. And because they've sort of minimized how big of a deal this is, they say they don't have to do anything by regulation. So what are they doing? They're amending their licensing manual, which actually does not require going through the Administrative Procedures Act, although they are taking comments. To me and to many people, it seems like a real stretch to say with a straight face that this is not a big deal. This is a very big deal in terms of changing the nature of banking, changing who can get a bank charter. And let's not forget that getting a national bank charter grants you automatic membership in the Federal Reserve. We still don't know whether it means you get access to the discount window. And we don't know what other types of implicit or implied benefits might go along with that. So there's a lot of fundamental questions here, and state regulators have not always challenged every preemption of state law, but they've always said that preemption really should be done by Congress to say, no, we want to harmonize this field and preempt what the states are doing and create a single federal standard.
So I want to ask a follow-up question, but before I do that, I want to give Patrick or Pratt an opportunity to maybe challenge the notion that the OCC doesn't have authority. Or you could agree?
Oh, I think that, the court will have an opportunity to weigh in, so we'll see what they think. But I think I don't know if the actual test on the APA is big deal, not big deal, right? And I think that a lot can be done under under guidance alone or under the authority that they've already been granted on this statute. Whether they have that authority under the statute, as you said, it's an open question. But I think that there's a good argument to be made, and I think they've made a decent argument that they actually, that they can license banks, right? And the banks, there are 3 core functions of a bank, and as long as you meet one of those 3 core functions, as Pratt mentioned, that essentially makes you a bank, and that they can give you the sort of license. I think it's still an open question whether, how involved the Federal Reserve has to be, depending on the type of license they get, and I don't think we should penalize any agency for asking for public comments and being transparent in the process, whether they're required to under the APA or not.
I'm certainly not trying to penalize the OCC for asking for public comments on their licensing manual. I'm just suggesting that when you make big changes at the federal level, it deserves a much more open process, ordinarily through rulemaking.
What about authority? What would you say if you were the judge in this case, Pratt?
So I don't want to litigate sort of the fundamental core authority, and it would be a moot point anyway because the courts may speak on this. I actually don't think this courts will speak substantively on this. I think the way that the actions were brought, they'll probably be dismissed just for ripeness on a procedural ground. But the one thing I would say is historically, banking law has been very reactive to crisis. It's always been behind the 8 ball. And so at least, it's something commendable to the OCC to have had this forward-looking sort of approach to banking. A lot of the history of the OCC and the expansion of banking activities has been through this even rulemaking process. It's been through interpretive letter writing. And some of the fundamental expansions of derivative activities and insurance activities that banks have gone through has been through the OCC adapting the fundamental nature of banking to modern technologies and improvements. And so you could argue that not only is this more transparent, but this is a more clear and open process than the OCC traditionally has gone through in the expansion of banking for the last several decades.
So the follow-up question I had for you, David, is, I asked you, given that this potentially creates an alternative that companies can choose to go the state route or the federal route, why the resistance from state regulators. And of course, you told me, well, because the OCC doesn't have the authority and it didn't go through the right procedure. But that's sort of procedural, right? Let's go to the more substantive question. Assuming they have the authority, would states be okay with this? Let's say Congress passed a law that did this. Would CSBS and the DFS, you would imagine, would be like A-okay with this because now there's a new federal?
Look, I think if a bill was on the floor, I'm sure the states might say we have concerns with it.
Okay.
But once Congress speaks,
Sure.
so
So I guess that's my question. If there was a bill, what would be the concerns with that bill?
So, and before I answer that, I just want to say one thing. Yes, I do want to commend the OCC for, at the very beginning of the process, when they established their Office of Innovation. And I think that was a very big and important step for a federal regulator to take. Because, let's be honest, in terms of innovation and creativity, most people don't think about federal regulators. I will say, with one exception being the CFPB, which given its newness and its structure, has presented itself as being open to innovation. But when you look at the other federal regulators, there's not a lot of innovation that's gone on there. In fact, I would say that they have, in many ways, hurt innovation and created this de-risking phenomenon, which I'm sure a lot of people who have to get a bank account and work in the Bitcoin world know how hard that can be. The federal regulators, and I would say the OCC in particular, led that de-risking. So having an Office of Innovation was an important signal both to industry and, quite frankly, to staff to say we need to be more open to innovation. But in terms of why it's a bad idea, I think when the idea first came out, I think a lot of startups said, this is going to be the answer to our problems. And if you look at the numbers which say, in the FinTech space, there's 4,000 startups or 4,000 companies in the FinTech space in the US and the UK, I would have to say that about less than 50 would ever qualify for this chart. It is going to be the companies that have the deepest pockets who can meet whatever capital requirements, liquidity requirements, business plan requirements. Oh, and by the way, federal regulators and state regulators are very strict about not changing your business plan. So that's a big deal for many people in the tech space. So the view from the states has been, this is about picking winners and losers. Because if you have, say 50 tech companies that can acquire a FinTech charter from the OCC, and then you have the other 3,900 plus who are competing against them, you now have a very unlevel playing field. So that is some of the market concerns that states have expressed in terms of there's going to be a very different set of rules and applications applied to these very, very large tech companies who might be able to acquire a FinTech charter and everybody else.
Ted, what do you think about that? Zappo is not the biggest company in the world, but you're a big company in the space, and you have a choice now. You can try to put the money towards a OCC charter. It has those concerns about rigidity, but it's not as if the alternative, which is state by state, is simple and inexpensive. So how do you make that calculation?
It's actually kind of a no-brainer for us. I mean, I can say that we've essentially decided that even if it takes a very long time, which it probably will, we would much prefer to go the OCC route than to go the state-by-state route. Now, there might be some individual states in which we also have a license, but just overall what I described about, it's not just getting the state licenses, it's then complying with the supervision, which again, we don't mind living up to the standards that are required, that's fine. It's the actual turning the company upside down multiple times per year when examiners come in. We'd rather just do that once, and it's important. It's so important to us that we basically decided we are going to go the federal route.
What do you think the threshold is, though? Do you think that this will be a competitive advantage for you because you'll be one of 50 companies that?
It's interesting. That's not something we've thought about a lot. I'll tell you in general, we've gone from, like a lot of companies in this space in 2014, we thought Bitcoin and virtual currency was going to change the world in a year, and therefore we had to be first with this product, and we had to compete with Coinbase or Circle or whomever, to feeling like the real competition for all the companies in the space is just execution. This is such a massive opportunity that what really matters is providing the best products and services to users and being reliable and secure. We don't worry about the competitive advantage aspect of this. I will say that, as someone taking my Zappo hat off, I do think it's important that there be some type of safe harbor, some type of sandbox for companies that are innovating in FinTech, so that they don't have to meet all the requirements that we should have to meet as a well-capitalized company with a lot of assets under custody. I think we don't want to use this charter to basically build really big, obese, non-agile companies from birth, right? That's not the point here. We're looking to innovate. And if you have to have raised 20 million and have a 50-person staff to actually comply with this thing, we're really not doing anything, productive. So I do think it's important that we have some type of sandbox or safe harbor.
Yeah. Patrick, you've practiced law outside of the Bitcoin space. So I know you have perspective on federal versus state frameworks. So what's your take?
Yeah, believe it or not, I have, actually. Although it's been a little while,
Yeah.
right? So I'm about almost 7 years in as a Bitcoin blockchain lawyer. But before that, I was a startup guy. And before that, I was a telecom lawyer. And we've seen a lot of these same issues play out in the telecom space. You had public utility commissions in every state. And they would look at things and they would say, well, if you're providing landline service, phone service, to a house in New York or in Iowa, then you need to go to the Public Utilities Commission and you get a license and deal with us. You also have the FCC at the federal level that would regulate you. And then the internet comes along, and then something built on top of the internet called VoIP comes along, and we have this question, right? Should a VoIP provider, voice over IP, right? Should Skype, for example, Pulver, right? For telecom nerds in the crowd. Skype, for example, should they be regulated at a state level? They're providing the same service that a telephone company was providing to the same customers, right, over a wire to their house, but there was something different about it, right? And it played out a bit differently than the picture you painted, right? And I think there was a realization that this is a business that if we regulate it at a certain level, if we regulate it at a state level, it will be a state level business, right? That the business model will be state level too, right? If we can figure out a framework to regulate it at a national level, then it will be a national level business. And the business model will be national and to some degree global. What we needed to do was not say, states, you have no right to regulate here. What we needed to say was, we need to create another path, right? The technology available is inherently different and it operates at a different scale. And the businesses function at a different scale and can provide better services because they function at that scale. If we have certain fintechs and they're not allowed to function at a national scale, there's a real question as to whether they can provide the real value, if we can really unlock the value of all the technology we're building and all the innovation that's happening around the world. So it's not so much a get out of here, states, don't regulate here, don't have, innovate, don't be the labs, don't be the innovative labs in the country. It's, we need to recognize the qualitative difference in the technology that's happening here and the impact it's going to have both for customers and businesses if they're enabled to operate at a different scale. And I pointed at you, I should say, thank you for being the piñata on that.
Yeah, that's what I'm here for.
Yeah.
Pratt, let me sort of switch a little bit and talk about, not whether it's going to, succeed or not, but, let's say the OCC charter goes through and they begin to issue charters. And it's important to remember that virtual currency firms were sort of a tiny slice of the fintech firms who were in support of a fintech charter, right? In fact, most of the firms who really advocated for this were marketplace lenders. So there's still some sort of open questions, and maybe we won't know the answer to until there are applications. But what are the questions specific to virtual currency? I imagine, is check paying, is virtual currency transmission check paying? And so what are the questions and how do you think the OCC might go through them?
Yeah, so paying checks is such an anachronistic sort of concept, but at least to that initial threshold question is what kind of electronic payment companies and functions would be eligible, at least that's a threshold question. The OCC, again, has taken a forward-looking position, and they said, we interpret paying checks in a modern light to be electronic payment transmission. So whether that includes Bitcoin, other types of coins, any sort of digital value transmitted, it at least appears initially that the OCC is open to that idea. But you're right, the bank model appealed a lot to sort of capital-intensive, heavy companies, lenders per se, and it makes a lot of sense in terms of how the OCC calibrates capital and liquidity requirements. If you're, let's say, involved in payment systems, you don't necessarily have a lot of capital on your balance sheet, or maybe they're custodied off of balance sheet, or you're doing other sort of payment intermediary kind of functions. You're a service provider, or you're a platform, or you're an exchange. How capital and liquidity requirements will be narrowly tailored to that kind of a business plan, which really has not been housed within the shell of a bank charter before, is an open question. Whether the Federal Reserve as a payment rail will allow you to have interoperability and enter into their payment system. How, if you want to connect with card associations, Visa, MasterCard, those types of other payment networks outside of the Fed, how will you fit into their card association rules, and will they accept you as a non-FDIC insurance taking institution? So there's a lot of connectivity, interoperability sort of questions, but fundamentally, at least as a threshold issue, the OCC seems philosophically open to business for all sorts of electronic modern payment systems companies.
Yeah.
So, and I want to address, and I think that was great. There's been this refrain about this is really just for heavily capitalized large fintechs, and it disproportionately serves their interests. And I think what we're ignoring there is that even if immediately it's only the top 2 marketplace lenders that actually get a charter, it creates an aspirational path for other companies. So even though they might not take advantage of it on day one, even if Zappo maybe isn't even able to take advantage of it on day one, the fact that it exists and is out there changes the whole game in terms of fundraising, how you build your company, how you structure it, and where you end up trying to point to go. And so I don't think it's just applicable to the people who can attain the license, if that's a very select few people. It's that it creates a pathway forward for all of these startups and all of these companies that goes all the way back to when the company is formed and how they're actually raising capital in the first place.
But Patrick, do you disagree with the notion that those few companies that are able to get a charter will have a competitive advantage? So meaning that the thinning of the herd could happen very quickly because there's these larger companies with a national bank charter and the advantages that go with it?
More so than today. I think the answer is no. And I think that the reason is because you now have a very clear path to a new market that didn't exist before, right? If we create a national market through a charter, it's a new market. It's not the old market, right? That's the state market. This is the national market. So the answer is no, because right now, those companies already have an advantage because they've gone state by state and they've acquired the licenses. The companies who will be most kind of hurt by this are the companies that have already started down the path of acquiring all these state licenses, who may then shift and abandon those efforts to go after a new market that they find more lucrative. But to say that somebody who's already gone out and gotten 40 state licenses, right, do they have a competitive advantage over the next company that comes up? Everybody has to go through those same hurdles, right? If you cleared a path for that same company that's starting up to get into a new market that's a bigger market through a simpler process, then maybe you've actually tilted it the other way.
I want to defend the states for a second. I never thought when I moved to Silicon Valley and got into Bitcoin that my life would become constitutional law, regulation, and compliance. But here I am. I can tell you that's not why most people get involved with virtual currency. It's funny, even guys that my friends that believe in limited government, when I start talking about states' rights, they start yawning and checking their watch. The reality is that the biggest check on abuse of power in this country is, in my opinion, the power of the states. And actually the powers of the federal government are laid out very explicitly in the Constitution, and they were supposed to stick to those powers. There are a lot of, it's been kind of debased over time. I look at the New Deal and the use of the Interstate Commerce Clause to basically run roughshod over states' right to regulate within their borders. And so I'm careful, actually, from an individual philosophical level about situations like this, because I try to be intellectually consistent. And I think a lot of problems in our country come from this misalignment of powers between the states and federal government. And I think a lot of solutions, it would shock people. Like I tell people in California, you know, if you want this, you can have it in California, but maybe the person in Montana doesn't want it. Is that cool? You can do it here, but it doesn't have to be there, meaning it can be a state law, not a federal one. It's amazing how few people understand that dynamic at the heart of our political system.
Ted, the beauty of being a lawyer is you don't have to be intellectually consistent. You just have to advocate for clients.
Yeah, that's true. You argue the case you want to. But, big but, I actually think that this case is a prime example of why there's an interstate commerce clause in the Constitution. I mean, it is ridiculous that companies that, like Zappo, that are essentially born not just national but global, would have to go through a state-by-state licensing process, which is essentially redundant. The standards we'd have to live up to with this OCC charter are just as high as virtually every other state. In fact, there's no reason to have to do this from a consumer protection point of view. So I think the Interstate Commerce Clause perfectly applies here, and it applies actually to an awful lot of new FinTech and financial services companies.
Ted, let me ask you a question. So if I understand correctly, probably most of Zappo's business comes from overseas, is outside the U.S. So do you ever consider, I mean, is international exit an option? Just signing,
Look, when it's wonderful, the vibe at this conference, it's like really positive. There have been some conferences the last 3 years where it's like a morgue. And you know, we have to constantly tell people, you just wait what Bitcoin's gonna do and blockchain, and people are like, yeah, right. Arrest this guy, will you? So, but now it's real, right? But we have learned, you have to be agile. We have been focused on the right jurisdictions from early 2015 when we started, and we are in Switzerland. We're in a UK jurisdiction. We are ready to go to Singapore. We've been in Hong Kong. Absolutely, we have an obligation to fulfill our dream and our mission for the company. And if a given jurisdiction isn't allowing us to do that, we have to morally, philosophically go somewhere where we can. And yeah, I do have a big concern about competitiveness in the U.S. if we strangle financial innovation.
David, does that concern you?
So I'm really not as much concerned about that. I mean, there are people who are touting the example of the UK and Singapore and every other parts of the world who are trying to foster innovation. One of the reasons that they're trying to foster innovation is that you look at the financial services environments in those countries, and there's about that much choice. You look at the United States, the financial services map here in the United States, thousands of financial services providers. A consumer has multiple choices. Now, I'm not saying it's easy. It's very difficult to start a bank. It's difficult if you take deposits. It will be difficult if the OCC charter is a non-depository bank. It's much less difficult on an individual state basis. And I think what we need to do is the states have to acknowledge, and I think that they have acknowledged, there is a problem and that they need to make it easier. So they're working together to create sort of more of a seamless process, sort of like, you know, if you're familiar with the Common App, if you're recently applied to college, very different from those of us who had to type them out many years ago. That type of approach will make it much easier. They also need to address your concern about supervision so that they're not bumping into each other by conducting examinations. That means real-time sharing of information. So acknowledging that there's a problem at the state level and trying to solve it. But I think at the federal level, we also need to acknowledge that there's a big problem. It's just this accumulation of regulations that were written for various crises over the years, and I'm sure they all made sense individually at the time that they were written. But it is time for us to have a reconsideration at the federal level of all these layers and how they fit together. That I think will go much farther to improving competitiveness in the United States than opening up a new charter.
So I want to get actually to that, and maybe we can look beyond the OCC FinTech Charter, which we've explained what it is, why it matters, why it might not be so great, and that the court's going to ultimately decide its fate. But going beyond it, recently we saw a coalition of very big internet firms, including, if I'm not mistaken, Amazon, Facebook, Google, Apple, form a coalition that now has asked Congress officially for a federal money transmission license, right? So a true preemption of state money transmission licensing. So if we can get concrete in the last few minutes that we have here, what should that look like? Who is the regulator? What do those standards look like? And from a state perspective, if you are going to go the route of having maybe a cross-state compact to make it more consistent, what would that look like? And how do we ensure that Zappa doesn't have a different regulator or a different examiner in their offices each week of the year? So why don't we start, Pratt, if you want to take a shot?
Yeah. So financial services is sort of interesting because usually it's a give and take between carrots and sticks, right? You get your license, that's your carrot, and then you have all your compliance requirements. And generally, the carrots and sticks are to be calibrated with each other, right? A bank is it's a big carrot, and so the stick is quite heavy. There's one example right now where it's in regulation, it's all stick and no carrot, and that is money transmission. You get your license at the state level, but you still have to register with FinCEN. And BSA, AML issues are enforced federally, even with sanctions regimes, with OFAC, that's enforced federally. So it seems like if you're going to register, and it'll be a criminal offense not to, with FinCEN within the Treasury Department, that FinCEN would be, at least from a design standpoint, a good place to seat.
Wow, so you'd give the anti-money laundering BSA enforcer a consumer protection role?
Well, it depends on whether you really think money transmission is consumer protection or whether it's it depends how you're philosophically thinking about it, but they're already functioning in that role. They already have that oversight. At the federal level, their enforcement examination authorities already bifurcated or trifurcated with the IRS, with the Treasury Department, with other banking regulators. That seems to be at least one logical seat of where you could place it.
Patrick?
So I think it's great. Again, it's this idea of how do we scale regulation up, and I want to agree with David because I haven't done that a lot. A rethink of how the entire framework is long overdue, and commending the OCC and the Office of Innovation, also the CFTC, who recently had a similar announcement. SEC. These are really big steps in moving in that direction, which I think is going to be the really transformative thing. But to get back to this point, I think FinCEN would be an interesting place to home something. The other thing is fundamentally, how many people in the room here, just by show of hands, if you don't mind, have used a cryptocurrency exchange? How many of you felt like you were using MoneyGram or Western Union? So why are we regulating them the exact same way? It's a very odd fit to say that a digital currency exchange is Western Union. Nobody in this room who actually uses that product or service agrees with that characterization. So I think it's great to have a federal scale regulation for money transmission. I question, at least for this crowd and this audience, how applicable that should even be in the first place. It does feel like that's a market, and we have market supervision laws and regulations that are a bit different. And maybe as we do the big rethink, maybe more applicable.
So David, go ahead.
No, go ahead.
No, Ted, please.
I was just going to say, I think it's a really good point to remember that a lot of the MTLs came into play because they wanted to regulate community banks and NICS check cashing and stuff like that. That's why it was possible to regulate them at the state level and appropriate. What we're talking about here is not that.
All right, so in 30 seconds, David, How do states make it, just one-stop shop and consistent?
All right, so what I've been talking to people about for a while now is back in 2008, something called the SAFE Act, Secure and Affordable Mortgage Act, to harmonize licensing of mortgage loan originators. I'd like to see something like that for money transmission. On the SAFE Act, it said that states, you've got to pass laws to meet these minimum standards, otherwise we're taking it away from you.
And examinations?
And examinations. So examinations, yes, I think that the states have already started to do that. They need to do a lot better job, and I know that they've announced an initiative by 2020 to have real-time sharing of information for examinations, because that doesn't exist today.
Right.
Or even home rule. Even home rule would be a potential for this that would be a very good solution for people who are really doing money transmission. Mm-hmm. I think it's really interesting, right? Like, we talk about the blockchain scaling debate, and we can have the regulatory scaling debate.
Yeah, this does not scale. All right, guys. Thank you so much. Help me thank the panel. Thank you, guys.